Hello and welcome to our channel. Today, we're diving into a popular technical indicator used by traders and investors in the world of finance, the Relative Strength Index, or RSI. RSI is a versatile tool that can help us identify potential overbought and oversold conditions in a market. Let's explore what RSI is and how you can use it in your trading journey. What is RSI? At its core, the RSI is a momentum oscillator that measures the speed and change of price movements. It oscillates between 0 and 100, typically plotted as a line on your trading chart. The RSI can be applied to various timeframes, making it useful for day traders, swing traders, and long-term investors. So, how do we interpret the RSI values? Well, RSI values above 70 usually indicate that an asset may be overbought, suggesting that the price has risen too quickly and a pullback or correction might be on the horizon. Conversely, RSI values below 30 often signal oversold conditions, indicating that an asset might be due for a price increase after a period of decline. Using RSI for trading decisions. Traders often use RSI in conjunction with other technical analysis tools. For example, when RSI indicates overbought conditions, above 70, and other indicators like candlestick patterns or support-resistance levels suggest a potential reversal, it can be a signal to consider selling or shorting. Conversely, when RSI signals oversold conditions, below 30, and other factors align for a bullish reversal, it can be a buying opportunity. Default settings and customization. By default, RSI is often calculated based on a 14-period setting, but you can adjust this to suit your trading style and preferences. A shorter period, e.g., 7, can make RSI more sensitive to recent price changes, while a longer period, e.g., 21, can smooth out fluctuations. In conclusion, the Relative Strength Index, or RSI, is a valuable tool for traders and investors to gauge the momentum of an asset and identify potential overbought or oversold conditions. It's crucial to remember that RSI should not be used in isolation. It's most effective when combined with other technical and fundamental analysis tools. So, whether you're a day trader or a long-term investor, incorporating RSI into your trading strategy can help you make more informed decisions in the dynamic world of finance. Thank you for joining us today. If you found this explanation helpful, please like, share, and subscribe for more valuable content on trading and finance. And as always, remember to do your own research and practice responsible trading. Happy trading!